So what the heck is going on with the stock market right now? What's going on, team? It's Ricky with Talkbot Solutions. And I wanted to make sure that we talk about this very, very quickly. And I found this article to be the most useful. You guys can let me know down in the comment section. I just wanted you guys to have the understanding of why the market is reacting the way that it is. So originally, why is the market going up? CPI data report came out today. We talked about it in our live stream. We talked about it in today's earlier video. CPI came in at 6%. The expectation was 6%. Our previous CPI was 6.4%. So we saw a decrease based off of the past 12 months. Great, right? This is a justified rally. A lot of people are not happy. They don't believe the numbers. I'm not here to be a conspiracy theorist. Based off of that CPI data report, it did show that inflation is going down. This is good news for the overall market. The market went up. Then we began to kind of trade sideways. We were showing signs of a resistance. And then, right, kind of what I expected to happen, then the market began to kind of retrace back. It went back to where we were from market open. So it literally gave back everything that it gained in just about 2 to 3 hours, right? In 2 to 3 hours, it took for it to peak, and then it corrected itself. Remember, we said in today's live stream, CPI data report days are very, very volatile. And it's because things get thrown into the market and analysts get involved. And this is the most kind of like useful article that I read today. And then all of a sudden, right, when we're testing this support right around 293 for the NASDAQ ETF QQQ, all of a sudden, right, on the last 30 minutes of the market begins to recover, and very, very aggressively. What happened? What changed, right? We went up originally. Obviously, there's still uncertainty because of what's going on with the banks. The NASDAQ market began to correct itself. And then all of a sudden, in about 30 minutes, it made a full recovery to where it was during all-time highs for the day, right? What happened? Well, this is the most useful article. It was actually shared to me by Webull. Friendly reminder, I do use Webull. You do not have to, but if you want to download the Webull trading application, which is this, they have it both for desktop and for mobile, and it's the 5th link in the description down below. Right now, they have a new sign-up bonus for every new member that if you use my link, which is the 5th link in the description, and deposit $5, only $5, you will earn up to 12 free shares. So just for all of those out there, you can have more than one trading application. But this is the thing that I found to be the most useful, is Japan's top brokerage has reportedly projected that the Federal Reserve will cut rates as soon as next week. This is insane, right? Because if you go back to what's been happening, the Federal Reserve has not been cutting rates. They've been increasing interest rate hikes, right? And we can check this right on over here. We can see this based off of previous interest rate hikes. Last time, it was only 0.25%, but it was to be expected because a lot of economic data was coming in hotter than expected. The unemployment reports, right? All of that stuff was coming in hotter than expected. So it was expected. That's why the NASDAQ market was originally correcting itself. It was expected that the Federal Reserve will have to justify being more aggressive than a 0.25% interest rate hike on the next in the next Fed meeting, which is expected to be March 21st to March 22nd. But now, based off of this analyst, right, from Japan, for their top brokerage, is saying that the Federal Reserve will not only potentially stop, but they will actually begin to cut interest rates as soon as next week, because that's when the next interest rate hike is supposed to be. They will halt quantitative tightening, halt it. It hasn't even really started yet, right? They were supposed to reduce their balance sheet by $95 billion, up to $95 billion every single month. They haven't done that once, and they've said this since last year. It's literally this just entire full circle with what's going on, right? Inflation is really high. Why was inflation really high? It was really high because we printed a lot of money, right? All those stimmy checks, all that free money that everyone wanted, right? That everyone needed. We printed a bunch of money into the economy, supposedly to help our people. But then guess what? Now our people are hurting, right? And now because of all that money we printed, we're now trying to reduce the amount of money people are spending. So this is why we raise interest rates by the Federal Reserve, right? But now, because we're raising interest rates, some people got too greedy. Banks, right? Silicon Valley Bank. And because of the way that they did business, They had to get bailed out. They got bought out, right, by HSBC or whatever that company was in the UK. Now, it is to be said that there is so much fear that larger banks can fail because Silicon Valley is a big bank, kind of, but not really. It's not a JP Morgan. It's not a Bank of America. Like, those are massive banks. If those fail, then obviously there's going to be a much larger problem. And this is where the concern is at. Basically, what this all is saying, and again, you guys can feel free to check this out yourself, is that they had an earlier forecast of an interest rate hike of 0.5%, of 50 basis points, right, during the March meeting. But now it's expected to be as low as 0.5% and or just no interest rate hike at all. This is the part that is crazy. It is literally a full circle, and it's because there is so much fear that if the Federal Reserve continues to raise interest rates because of sticky economic data, that other banks will fail. And then those will have to get bailed out. And do you remember what happened in 2008? Banks got greedy, and they had to get bailed out by the government back then. Banks got greedy now, and they have to get bailed out once again. And or think about it. Who do you think is paying for this? Because they print all of these stimmy checks, they boost up the economy, they make the money, they get greedy, they try to make more money than they probably should have tried to make, right? They're very aggressive, and then now they get caught in the sticky situation, but they're like, but don't worry. The bank, the federal government has our back, right? They're going to bail us out. So they make all of their money, and then they get bailed out. And do you know what happens when they get bailed out? Well, they have to print money to bail them out. And who do you think suffers from that printing of money? Well, then they get free money because they get bailed out, right? So then it's people like you and I that, we didn't get bailed out, right? If my company fails or if your company fails, we're screwed. But if the banks fail and their companies fail, right, then they get bailed out. How beautiful is that, right? You can take all the risk you want, be super aggressive. And at the end of the day, it's always the taxpayers that will end up covering for this, right? Because as they print more money to bail these banks out, that just makes our money a little bit more worthless. But what if they don't get bailed out, right? Then obviously we have big issues too, right? Because then we don't have any of our money in our banks. And if they fail, then we fail. And then I guess we do have a bigger fiasco. It's just like there's no good outcome out of this. You guys can feel free to share your thoughts down in the comments section. This is the part where I see that a lot of people are just very frustrated by the government, right? Very frustrated by big institutions, right? They have not started reducing their balance sheet with the Federal Reserve. They're barely raising interest rates, and now they're expected to maybe just stick to their low interest rate hike and or no interest rate hike at all, cutting interest rate hikes and just hoping that we don't put these big banks in any more trouble that they put themselves in, right? Because it's not us that put them in that trouble. It's themselves, right? But don't worry, our government will bail them out. So just wanted to share my thoughts with you guys. That's pretty much what I see going on as of right now. If you have any updates for me, I'd love to read it. Feel free to share it down in the comment section, and we'll go from there. So I appreciate your time. Hope that we earned a thumbs up. Please consider subscribing. I'll keep you guys up to date with anything new that I learn. And again, all I literally ask you to do is to show some love and support, drop that thumbs up, subscribe to the channel. And for all of our Learn Plan Profit traders, don't forget, we'll see you tomorrow at Market Open for our live trading session. And if you want to be able to watch me trade live as soon as tomorrow, it's the second link in the description down below. So like always, let's make sure that we end the year on a green note. Take it easy, team.